How's it going, everyone? It's Matty again from Logikfx, and today's a little bit different. I'm going to be covering some of the analysis that I did in January, the start of this year, and that was some fundamental analysis on the currency pair NZD CAD, which is the New Zealand dollar against the Canadian dollar. And the idea essentially was that after the analysis, we wanted to short the NZD CAD. Because all the factors and the indicators and the economic data was signalling that this is potentially a really good short position with a minimum of a 1 to 3 risk reward. I'm just going to run over because I think we've got a lot of new subscribers and we've got a lot of new members, the analysis steps and the potential entries that we could have got in on this trade idea if you were a member. And if you weren't a member, we do release some free analysis as well. But if you really want to know how to do this yourself, it's part of our Logikfx membership. If you're interested in that, the link will be in the description to watch one of our free fundamental webinars, which is basically the tutorial and the starter of how important it is, and it gives you an insight into the fundamental analysis strategies that we employ. Now, for the NZD CAD fundamental analysis in January 2020, we went over a few factors, and the first one was the gross domestic product and more specifically the differentials between the GDP in New Zealand and Canada. So, as I mentioned here, although GDP differentials are tightening overall, there was a net positive of 0.9%, which is classed as a very slight long bias. So although we had a short bias overall at the end of the analysis, the GDP differentials said there was actually a potential long. Now, we're not confident as the GDP is a lagging indicator of the economy and of what's going on, because there's a few factors that affect GDP, and those are actually released preliminary, and it actually gives you a chance to predict what's going to happen to the GDP in the future, which is what traders are potentially doing, and that's how you make money as a trader. So, the next factor that we analysed is actually the A2 Milk Company, which is one of New Zealand's massive dairy exporters, and we can see straight away, looking at the chart, NZD CAD versus the dairy price. One's going up, the dairy price going up, and NZD CAD's going straight down. And that is what we call an inverse correlation, an inverse relationship between the two assets. So again, New Zealand itself is a major exporter of dairy products and meats. So there's no surprise of this too here, and it's why we've actually included it in the analysis, because we want to see what potential factors could be affecting the currency pair. Now, with an inverse relationship, if the price of the exchange rate is decreasing, the performance of the company is potentially meaning a weakening value. So in this sense, as A2 milk dairy price increases, the NZD CAD exchange rate should decrease following. And the latest values shown on that date in January were that there was a performance of 6.59%, which is a fairly big increase in returns for the A2 milk company, and it should signal us now a potentially strong short bias going in with the NZD CAD. And that's what we scored it on our scorecard. If you want more details, it's part of our membership, it's part of our Lead to Traders and our Professional Education Masterclass series, and it covers everything that I'm covering here in the analysis post. This is basically just a quick rundown, a quick review. It won't go into too much detail, there's so much to cover. Next one is the Steel Tube Holdings Ltd analysis, and this is because New Zealand also exports some major building supplies and components such as computers and broadcasting equipment. So we've analysed the correlation between these two, and from the two there was actually a negative relationship between the two from 2010 and 2013. So as one was going up, the other was going down. But over the last 5 years as a starting point, we've given the analysis a slightly long bias due to the recent performance of the Steel Tube Holdings increasing by 5%. And that is because, well, very recently it seems to be following each other, right? So NZD CAD since, let's say, 2016, end of 2016, 2017, start 2017, they've kind of been following each other. As NZD CAD exchange rates goes down, the Steel Tube Holdings company has been going down in returns too. So that's an interesting relationship there. And relationships between stocks and currency pairs aren't always as static, and they can change. So if we use the overall correlation over the last 10 years, it has shown to be a negative correlation though. So it has given us that short bias on the exchange rate of NZD CAD. And that's what we're going to use. We're going to stick to the overall 10-year horizon of the correlation between the two, as we've done above. Now, Another point that we've analysed is an important one, which is the interest rate differentials and the NZD CAD. And what we can see straight away, in the past year, we've seen the interest rate differentials between the two economies tighten. This meaning that the interest rates, so New Zealand have decreased their interest rates heavily, whereas Canada have increased their interest rates during that time. This was in January. And this type of relationship shows how investors can still attain higher yielding assets in New Zealand due to interest rates alone, which may cause future money flow and supply. However, if this trend continues and we see the interest rate differentials go in favour of the Canadian dollar, we don't want to be in a long-term position in the markets, because if these interest rates do start to, tend towards a negative differential, which means the New Zealand dollar has a weaker interest rate than the Canadian dollar, we may see money flows going towards the Canadian economy. And that's why we don't want to be in a long-term position, because we might see potential volatility coming up. And that's actually potentially what happened recently with the COVID-19 situation. Global economies around the world were tightening and were reducing their interest rates, obviously to impact their economy, so that people didn't have to pay as heavy mortgages, they can lend easier, all that good stuff. And so just using the data since January, what we came to the conclusion is that since the interest rate differential has been dropping significantly in the last year, we're signalled with a short bias again on this currency pair. And there are some numbers behind it. We're not going to go through it in this post, but there is a specific scoreboard and scorecard that you want to be scoring this on from 1 to 10. And that's how we come up with our trade ideas, and how it's come up with whether a currency should be weakening, a currency should be strengthening based on economic data. The final point here is the NZD CAD NZX 50, which is New Zealand stock index, and against the exchange rate. And this is one that we analyse. We analyse it fairly similarly to the ones that we discussed above. So one of the initial things that I want to go over is actually where do we start off with the analysis, and how do we come up with the ideas, how do we choose currency pairs to trade. And that comes up here. So NZD CAD asset here, logic strategy score. Now this is exactly what we're doing at Logikfx on how to filter through the market quickly to identify which currency pairs we want to trade using economic data. So if I just flick to the logic strategy scores here, straight away we've got a easy to use dashboard with different currencies, different strengths of the currencies, and which direction they're heading. So here we have the US dollar. It's currently slightly weak, but it's strengthening quite a bit. Now we have the euro, slightly weak, strengthening a bit. New Zealand dollar, slightly strong now, strengthening quite a lot. That's what we're using to quickly identify currency pairs to trade. So the most recent data is showing New Zealand dollar strengthening quite a lot, and it has a strong score. So that means potentially in the future we want to be longing New Zealand dollar now, and pairing this strength with a weaker currency, something with one of them like this, the US dollar, the euro, the GBP, the Swiss franc, the CAD, something like that. And this is what we're using straight. This is our first step in the fundamental analysis, the identifying which currencies are fundamentally strong or weak. And this is what we've developed at Logikfx. It's part of our technology program, and it's literally what you get as a member when you join us as well. So it quickly and it efficiently saves you so much time of having to go through loads of data when you can quickly identify it like this, instead of crawling through loads of Excel sheets, downloading all this data and taking hours and hours and hours. We're not part of that. We're part of saving time, we're part of saving you time, part of saving our members time, and that's why we've developed this for us and our members. And that's our first step in the analysis, and that's what the scores you saw here, -7 +4. These were the scores in January. And the next part of the analysis, we don't just look at the scores, we now need to compare them against each other. So we now need to compare the New Zealand dollar against the Canadian dollar against each other. And that's where this relative section comes in, the relative score. And that's what we've done here in all this analysis. We actually have a full Excel sheet guideline on this, a full Excel sheet breakdown on what to do with all these different factors and which factors affect the economies relatively. And you'll get that as part of the Forex masterclass that we go through. And overall we scored it at -15 for the relative score and a +12 for Canada. And obviously the net score is like -22 +16 for NZD CAD, which is a good short bias overall for the NZD CAD exchange rate. The final step, well, one of the final steps, is looking at the sentiment of the market, looking at the hedge fund sentiment specifically. What are the hedge funds doing? Why is that? Because the hedge funds are the big boys in the market who are in the market to make money. We're not in it for the commercial positions. Who are the commercials? They're the commercial businesses, the commercial farmers, the hedgers. They have physical products in the markets which they need to hedge their prices on. Think of it like this. If you're a farmer, or let's say you're Microsoft, you export loads of Microsoft laptops or chips or whatever to Japan. Now, if the Japanese yen exchange rate now fluctuates significantly, what happens to that? Let's say you have $1 million worth of chips that you need to send away. You're now exposed to an exchange rate risk, and that's what hedging does, and hedging fixes. It helps you make the money back on the exchange rate risk, or negate the risk essentially on the exchange rate, so that these companies, they're in it not to make money off forex trading, but they're in it to hedge risk. And that's why we're following the hedge fund positions here. So the hedge funds are in the pink, and quickly what this line means is a dumbed down breakdown is there's a zero line here, plus 80, minus 60. Anything below zero means that the positions are short. Anything above zero means they're long. So below zero short, above zero long. And we're focusing on the pink line, the hedge funds here. And during January 14th, the pink line was actually below the zero mark, and this means that the net open interest of hedge funds was heavily short during this time, and that gives us a really good confirmation and confidence that we want to be going short on the New Zealand dollar too, because if the big boys are short, we want to be short as well, and that's what we want to be doing, that's what we want to go. And we don't just do that for the one of them, we're going to do that for the Canadian dollar also. And over this time we have the opposite. Great. And it's just flipped, and what I mean by flipped is that it's gone over the zero line here from last week in January. And what that gave us a clue of is that hedge funds are net short the New Zealand dollar and net long the Canadian dollar. Great, there's money behind our idea, and we can potentially get in on a great short position with at least a 1 to 3 risk reward, roughly using our ATR, which I'll come on to later. So after that, after checking the sentiment, we've ticked it off, short bias off the sentiment as well. And we go into the ATR, we go into the data on the volatility of the asset to set our stop loss and our targets. And we did this with I think here was like a 3-month time horizon to work out our stop loss. We're not part of setting stop losses based on pips. That's not how it works in the markets. You really need to get out of that habit of setting stop loss based on pips, because every asset is actually different. You can't set a static stop loss of pips, because every asset moves differently. Stocks move differently, Forex moves differently, different currency pairs move differently based on the volatility and the volume in the markets. That's why we don't set it based on static pips, because you want to be setting it based on volatility, and that's what this ATR calculator does here in our part of our Forex masterclass and what I'm showing you right now. So as the short calculator here, we had that current exchange rate of 0.8683. We set the stop loss at 0.8813 and a soft target at 0.8292. That means that's giving us a potential 1 to 3 risk reward, and it's shown right here. And this is actually what the chart looks like. And just to make sure, we've done all this analysis without even looking at the charts yet. So we're doing it completely opposite the way of normal retail traders, and that's how you're going to make money in the markets. Now, finally, we've got a chart here. We've come to the conclusion that we already want to be short on the NZD card, and we're now asking ourselves, is it a good time? Is it a good price? Well, it's a good time because the hedge funds are saying yes, this is a good time. And as ourselves, we want to take our due diligence, we want to make sure we can time this properly. Is it a good time on a technical level, on a price level? Is it expensive enough to sell? And based on my own analysis, my personal preference, I just drew a little trend line. Anyone can do this trend line, it's nothing special. And I thought, right, we've got a trend line here. It's heading downwards. It's heading towards a downward trajectory. It's retraced a lot since October, and now it's actually respected the trend line. It's hit another sell zone up here. I think it was a good time to go in. 1 to 3 risk reward. What happened then? Well, this was the end of our analysis in January 14th, and since then, what happened? Well, this is it. So January 14th was around here. It actually moved heavily in our favour, multiple opportunities to get in on this position, and it actually went about 1 to 5 risk reward. We had that soft target of 1 to 3, which is always safe. And what I'm going to go over now today actually is that after this trade, it's been since April, March, we now have the opposite conviction. We now actually have an opposite conviction to potentially be longing the NZD CAD based on our new analysis, reanalyzing the currency pair on our latest analysis post. And I've actually included a few more factors such as oil, because oil is a big factor in Canadian dollar, after analysing the imports and exports of the economies. If you want to have access to this analysis post, it'll be the link in the description as well. Completely free to everyone. It's about a 10-minute read. And actually, what I discussed in this, if I just delete these this last month's analysis from January, is that we may be seeing a potential long coming in the future. So I'm not going to go over all the fundamental analysis, the COT analysis, the hedge fund sentiment analysis, all that stuff. I'm just going to quickly glance towards the chart now. So on a weekly level, or you could say monthly, it's hit a major level of support at 0.82349. And that's been respected a few times before in the past. It's not the first time that this has been hit. And since this level, we have broken it slightly, but that, it doesn't mean too much. This is expected, to be honest, in an environment where, impacting things like COVID-19 create massive volatility in the markets, and it can stir up the markets really quickly. And that, support levels are not stick and stone, or whatever that phrase is. They can be broken at times. It's just what happens afterwards. You don't have to be that strict on, is there a wick on the end, or is there this and that on the end? What happened afterwards is that there's a huge retracement. Bulls came in. Look at these engulfing candles. Look at all the green bars coming in. Sellers had no chance after this on a weekly level. That's how much money is going in on the market for the long position right now. And after using multi-time frame analysis, went to the dailies to see what's happening. Multiple higher highs and higher lows. Definitely a good sign. Recently hit a resistance level here with a potential shooting star coming up at the end of the week. That's a potential good sign, because what we would potentially want to be doing right now is waiting for this position. We want to be patient enough, and this position potentially coming down here, somewhere along the lines of here, for our long idea that we've just done the fundamental analysis for on our recent posts for our members, and actually anyone for free. After that fundamental analysis, if it does potentially retrace, we want to get a good price on along. We don't really longing right up here because there's that room to move down and hit a stop. So we actually want to be waiting on that position, somewhere around here, and it could be the start of a major upwards trend in the future, especially with the conditions of COVID-19 coming up. New Zealand has been a major economy to look at, because their infection levels and their death rates are significantly lower than other economies around the world, and they're going to be the ones that are kickstarting their economy the fastest, probably one of the first ones in the economy to go. That means we may see a strengthening New Zealand dollar. And that's the end of our analysis. Again, if you want to have access, to the full masterclass series, the full step-by-step strategies and walkthroughs on how to do this, having access to logic strategy scores and the COT analysis charts that we displayed here, the link will be in the description to get you started. You can get on a Zoom call with us to see if you're fit to be a fundamental trader, fundamental leader trader. And yeah, hopefully this video did you well. It helped you get a good idea of what we're about, what the analysis is about, and how we're generating these ideas, and potentially keeping an eye on this NZD CAD position, because it could be a good one. But keep an eye on it. We don't want to be stick and stone. We don't want to love our trade ideas so much. The data might change in the upcoming months or the upcoming weeks, and we want to keep an eye on that data. And we may potentially be saying, oh, this is not a good time, this is not a great time, especially considering actually the New Zealand dollar is in a net short position still. We want that hedge fund line to be above zero to be completely confident. But we could still get a good idea on the fundamental analysis alone, as these two are contradicting each other, so it neutralizes. That's it for me anyway. Matthew from Logikfx. Comment below, any questions or messages. Feel free to drop us an email. The link will be in the description. Thank you for watching.